lately, the contract electronics manufacturers have been on fire. I mean, you think of J-Bill, we've had them on Flex. Taiwanese company Foxconn, as well as a lesser-known Canadian outfit, the one we're going to talk to now, called Celestica. Here's a stock that has more than tripled for the year coming into this week. Just, that means 253% as of today, jumping almost $25 or 8% today in response to a great quarter and, maybe more important, a bullish investor day where they really explain what's going on right here in New York City. Celestica posted a sizable top and bottom line beat with a terrific forecast for 2026. How they do it? These companies are all beneficiaries of the data center boom because they manufacture so much of the hardware that goes into these warehouses full of servers. Celestica, though, has started designing its own equipment, too. In many ways, that's where the money is. At this point, my only worry is maybe it's too late to buy. I've liked it for a long time. Stocks has had a good run, though. Let's take a closer look with Rob Mionis. He's the longtime president and CEO of Celestica to learn more. Mr. Mionis, welcome to Mad Money. Great pleasure to have you.
Wonderful to be here, Jim. Thank you.
Well, first of all, congratulations. When I look at how well you have done, it really is because you have taken both different strategy and different tactics from the old days. You've taken on a much more lucrative approach, and I want people to explain, because it's your first time, where that manufacturing is, you may be the best there is at making things.
Well, thank you very much. We made a decision a long time ago to move away from commodity markets and to get more into design and manufacturing. And that transformation has paid off in spades for us.
So why don't you talk about, for instance, what this might mean in terms of the data center? Because a lot of people say, well, who makes that stuff in there? And in many ways, you make a lot of it.
We do. So what we do inside the data center is we make high-speed networking, we make AI, ML compute, and we make storage systems. And we make it both at the component level and the systems level. And we deliver these to hyperscalers, digital natives, and also enterprise customers. And we do so at scale. And the reason why we're able to do that is because we do the design and the manufacturing. So that design for manufacturing is a great recipe to be able to consistently execute at scale.
Tell me, I might be wrong, but at one time I viewed Celestica as someone who did it for others, so to speak. And I know you still do some of that, but you were doing proprietary things that are not just a blueprint from another company now.
That's correct. A large portion of our business, over 40% of our business, is actually designed for hyperscalers, designed for digital natives. And here we actually design our own equipment, we manufacture our own equipment, and we deliver it. And it's at the bleeding edge of technology. Some of the latest technology that we're using is right in development these days.
Now, one of our favorite companies for a long time, and a long-time position for my charitable trust, is Broadcom. Yeah. We had Hock 10 on recently. I think that Hock may be the most exacting CEO in America. He's a tough guy. But when he comes on, he tells it to you straight. He obviously does not tolerate anyone who's doing anything other than the finest work. You are a preferred provider of them. Now, what does that mean?
We think we've earned that, and they're a great partner. They make bleeding-edge technology for XPUs and networking, and we use their silicon in a lot of our designs. So what it means for us is when they launch a new piece of silicon, so the Tomahawk 6 is their 1.6 terabyte silicon. When they launch that into the marketplace, they'll work with us to develop products, and those products end up in the major hyperscalers.
All right, now, I want to talk about the communications portfolio. Your strong growth is in optical programs. We are big believers that optical is not nearly as big as it will be in the data center, and fiber won't be as big. What will be much bigger? What are you seeing in the optical programs you're doing?
Well, optical is certainly growing. There's something called co-packaged optics, or CPO, and it'll probably be prevalent in the 3.2 terabyte mode. And we're just starting to experiment right now and do proof of concepts, POCs we call them, for the 1.6 terabyte. And co-packaged optics has the opportunity to actually reduce the power consumption, and it's a big driver, potentially a big driver in the future.
Okay, so what does that, excuse me for pressing on this, but sure. Co-packaged optics, what does that look like when I go into the data center? So.
Well, it's a piece of silicon that Broadcom is developing. So that's where the optics is actually on the silicon. So it would eliminate the need for the pluggable optics. Truth be told, there's probably room for both types of technology in the future, pluggable optics, or co-packaged optics in the future. But over time, that seems like the growing trend, and we're working with Broadcom and others on developing that capability.
Okay, now I don't want to lose sight of that the ATS segment does matter. I mean, a lot of people just say, "What are they doing with that?" But historically, I know it's slower right now, but I think that just seems like it could pick up, and I don't want to lose that business if I'm a shareholder, right?
It's a great business. So it's about 25% of our revenue right now. We operate in 4 key sectors. So we do high reliability solutions for aerospace and defense, semiconductor capital equipment, health tech, and industrial. And our focus right now is through engineering-led engagements and to improve the margins in that business. And based on the guide that we just gave, margins should be up about 70 bips by the end of the year over year.
Now, one last more philosophic question. There are a lot of people who feel that this is a bubble. I know I follow people like you and like Hawk, hard-nosed people. And I say these are people who are different from 1999 and 2000, where I was very much in the mix. And I didn't see hard-nosed people. I saw dreamers. Do you believe, like I do, that this is actually a very important moment in the world, and the companies that are building this moment are going to end up reaping big profits and not big losses?
I agree. I mean, AI right now used to be a nice to have. It's a utility. It's a must have. So if your competition invents a new drug or optimizes their supply chain, you're going to follow suit. And what we do at Celestica is we build the infrastructure enabling that. So if AI is speeding freight train, we're laying the tracks ahead of this freight train,
well put.
Making that happen.
Well, I'm very proud of that you came on, because your company has been a company that I've wanted to talk to for a very long time, and it'll be always I'll say, "Oh, darn it, they're up 9 again, they're up 8 again." But people should recognize you're a great businessman and a great manufacturer. I want to thank you for coming on. Congratulations on your Analyst Day.
Thank you very much, Jim, and hopefully you'll have me back.
Oh, that would be terrific. Rob Mionis is the president and CEO of Celestica, long one of my favorites. And cleared, they call them decks. Very easy to understand this company. Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.